Responsible investment means a range of different things to us. My trustees took a decision in the late 1990s that the environmental, social and governance extra financial issues that face companies and other assets could impact the value of the investments that we have. Therefore, we should take action to both encourage the companies that we invest in to manage them, and secondly, to make sure that we understand the issues and incorporate them into our investment decisions. So it's about both protecting the value of our investments, but also encouraging companies to better manage issues that could impact their value over the long term and impact on society.
I think it's becoming increasingly relevant for everybody in the investment world, because people are realising that with community expectations changing, with the advent of increasing potential regulation by governments, these issues go directly to the bottom line.
I think an important change that we've seen in the market over the last 2 or 3 years is the significant increase in amount of research that's being produced by the sell side that covers these issues. It's gone from a relatively low base in 2003, 2004 to the point where there are significant teams now being built into the major sell side and other research providing houses, so that information can be provided through the routes that fund managers are used to receiving information. They're analysts, the sell side analysts, containing extra financial, environmental, social governance information that they can then build into their investment decisions. I think there's a long way to go. I think what we need to see more is the integration of the financial and extra financial. Currently, they're still fairly separate, but the best research is that pulls it all together so it can fall onto a fund manager's desk and they can see how these issues impact the companies in which they invest. And I think we're beginning to see that from the best houses, and I think we'll see a lot more going forward. Not all data is quantifiable, but some of the more recent issues like cost of carbon specifically can be given a value. Sometimes, though, integration isn't just about numbers. We see integration as 2 ways. One is about how it can be built into their financial models. The other way is how we influence their mental models of companies. So provision of information that changes how they view a company, how they view how a company's management operates, how their strategy might go forward, is equally as important as how we can change the investment models that they're actually using. And we focus on both of those, so some of the less quantifiable data can still be fed through to portfolio managers if it's communicated in the right way, so they can see that yes, there is an issue here that could impact value that they need to think about when they're getting their broader understanding of a company.
I think particularly in the UK and in Europe, a lot of the asset managers are really ahead of the game internationally, and we know that because a lot of them, I think, take their management responsibilities very, very seriously. And of course we have a lot of asset managers who are signatories to PRI. So one of the issues that the asset managers probably very justifiably complain about is that very often they don't understand what the client wants out of this, because the asset managers are very often feel as though they're forced down a line of short-termism. And so you've got this situation where institutional investors and people like pension funds, we sit there and say, we are long-term investors. We are universal investors. We don't want to sacrifice long-term interest because of short-termism. So we could say, well, we are very good. You know, we are long-term investors. But in actual fact, we are putting pressure onto asset managers to deliver on a quarterly basis. So we have to have a much clearer dialogue with the asset managers. And I think a lot of the responsibility for this disconnect actually lies with us. And you know, no doubt there are problems on the asset management side, but I think we all have to understand each other's position better. And I think that trustee boards need to be absolutely clear about what they want when they set a mandate. And they need to be absolutely clear and totally bought into the PRI principles, because if an organisation signs up for PRI, then the commitment has got to come from the top, because without that commitment, nothing will happen down below.
Over time, we would expect all of our managers to tell us how they're going to take environmental, social and corporate governance issues into their mainstream investment processes. We will ask them through RFPs, and we will instruct them through mandates, and we will hold them to account when they report to us on their performance.